Hello friends, in this video we are going to see profit and loss account. There are two final accounts, income statement and balance sheet. Income statement is divided into two parts, that is trading account and profit and loss account. In trading account we record the purchase and direct expenses on debit side and credit side income. Operating income we record on the credit side of the trading account, and trading account gives gross profit or gross loss. That gross profit and gross loss we transfer into the profit and loss account. Okay, that we are going to see in this video, profit and loss account. The main purpose of preparing the profit and loss account is to calculate the net profit or net loss of a concern. Here concern means business. At the end of the year, all nominal accounts. What is meant by nominal account? Nominal accounts are the accounts of expenses, losses, income and gain are closed by the transferring their balances to profit and loss account. At the end of the year, all nominal accounts are closed by transferring their balances to profit and loss account. On debit side of the profit and loss account, all expenses and losses are recorded. See, expenses are of two types, direct expenses and indirect expenses. As we have already studied in the trading account, all direct expenses are recorded on the debit side of the trading account. What is meant by direct expenses? The expenses incurred during the manufacturing process of conversion of raw material into the finished good. That expenses we treat as a direct expenses that we record in the trading account of the debit side. And other than these expenses, that we call it as a indirect expenses. These expenses are assist the manufacturing process. Okay, that expenses we call it as a indirect expenses. That expenses we record on the debit side of profit and loss account. That expenses are of two type again, that is operating expenses and non-operating expenses. Operating expenses are the office and administrative expenses, selling expenses and distribution expenses are called as operating expenses, which are related to your operations. Okay, that are the operating expenses, that is office and administrative expenses, selling expenses, distribution expenses. And other than these operating expenses, that is non-operating expenses, we record on the debit side of profit and loss account. Okay, on credit side of all the incomes and gains are recorded. Again, here income refers to the operating income and non-operating income. Operating income refers to the income earned from the operation of the business. Okay, and non-operating income are the income other than the main business, that we call it as a non-operating income. For example, interest on the investment of the outside business, profit on sale of fixed asset, dividend received are the non-operating income that we record on the credit side of the profit and loss account. Then difference between these two sides means debit side and credit side. Debit side we record the expenses, on credit side we record the income and gain. The difference between the two sides is either net profit or net loss. This net profit and net loss is transferred to the capital account of the balance sheet. Okay, now we are going to see the actual pro forma of the profit and loss account. As I have already told you that on debit side we record the operating and non-operating expenses. Operating expenses are the office and administrative expenses, selling and expenses and distribution expenses are the operating expenses, and non-operating expenses we record on the debit side of profit and loss account. Office and administrative expenses are related to office and administrative, that is office and salary, rent, printing and stationery, telephone charges, legal charges, audit fee are all are the office and administrative expenses. And selling expenses which are related to selling activity, that is advertisement, discount allowed, commission paid. Discount allowed is loss. As I have already told you that on debit side we record the expenses and losses. If the company allow the discount, that is means it is a loss. That's why we record on the debit side. Commission paid, salesman salary, go down rent, carriage outward, agent commission, traveling expenses are the selling expenses. And another operating expenses are distribution expenses, which are related to distribution activity. That is the depreciation on vehicle, traveler salary, repair and maintenance. Then non-operating expenses are discount on issue of shares. Preliminary expenses are the non-operating expenses. Okay, which are not related to your business, but that are the expenses. Then on credit side, we record the income, non-operating income, because operating income we have record in the trading account. Operating income means what? Income from the business operation. That is operating income. And non-operating income are the other than operating income. That is non-operating income. That non-operating income we record on the credit side. Interest received, discount received, dividend received, income from investment, interest on debenture, any other income that we record on the credit side. See, difference between both the sides, either profit or either loss. If the debit side is more than the credit side, means result of the operation is loss. If there is a loss, then that loss we record on the credit side, that is by net loss carried down. And if credit side is more than the debit side, the result of the operation is profit, that we record on the debit side, that is to net profit carried out. And this either we generate the net profit or net loss. We transfer that net profit and net loss into the capital account. If the profit is generated from the operation, then we that amount we add in the capital account of the balance sheet. If the loss is the result of your operations, then that we subtract from the capital account of the balance sheet. This is all about profit and loss account. Profit and loss account is a part of income statement. Profit and loss account calculate the net profit and net loss of the business. On debit side, we record operating expenses and non-operating expenses. And on credit side, we record non-operating income. And net profit or net loss we transfer to the capital account of the balance sheet. Thank you.